Hey folks, so just wanted to do a midweek recap on technicals. So we're just going to start this out same way as usual. We're going to look at the Fed funds futures. So when we're looking at the spread between the March contract and the December contract, this number actually went down. So before in the past, we were looking at around negative 0.25, which is implying one rate cut. But now, after the data drops that we got recently, we're now looking at negative zero point 0.5. So yeah, there's a little bit more recession risk here, and now the Fed funds futures is thinking, hey, maybe we might get one more rate cut than we thought, just like a few days ago. So obviously, this information is very, very volatile, and it holds a lot more weight when we get closer to that Fed interest rate decision. So as of now, this is saying, hey, you know what, maybe we might get like two rate cuts by the end of this year. So yeah, that's pretty much that situation right there. Now, if we're looking at the Qs, let me just zoom out a little bit so you guys can see this fully. So I got this blue line right here. It's an anchored VWAP from the all-time highs. I got a blue line right here, which is an anchored VWAP from these bottoms. Now, let's just take a look where this actually is. So this anchored VWAP is kind of right along this resistance line right here. So right now it's at 316.18. We are ever so slightly below that. We're at 315.92. So obviously, if we stay under this for a little bit while longer, then that could lead to a little bit of downside. So do note that, right here we had this false breakout. This could be a false breakout too. And then, maybe we could fall all the way down here towards where this bottom anchored VWAP and the support trend line are kind of aligning right here. So, you could say that that's going to be right around like the 395 to like 302-ish area. We have that 50-day right there, and we have that anchored VWAP, and we have that support. So by the time, let's say we reach the bottom of this, we could be around 302 possibly. And then, if we were to cut below that and this anchor VWAP isn't catching up fast enough, then yeah, that could act as support in the future. But we will obviously be paying attention to that if it does happen. Right now, what we do know is, hey, you know what? We're basically right on this trend line. Let me just zoom in a little bit more so you guys can see that. Yeah, you guys can see we're basically right on there. We are pretty much right on there. And now we have several gaps. Let me show you what happened today. So when I'm looking at the 1 day, 1 minute, we got this new gap. Hey, you know what? This is a gap to the upside. All right, it's at 318.19 to around 318.79. So all right, now bulls have some motivation. Okay, motivation for bulls. Fill this. Motivation for bears. Let's go back. Let's look at a 10-day, 5 minute. So motivation for bears. This gap right there, that gap right there. So, obviously there's a lot more motivation for bears just looking at this right here. We got two big old gaps to fill, and then we got one small gap right up here. So, the question here is, okay, are we going to fill this one first, and then we go up and we fill this one? Are we going to fill both of these, and then we go fill this one? Are we going to fill both of these, and then not fill this one for a while? Are we going to fill this one, continue on up, and then not fill both of these for a while? So there's a lot of different scenarios that could play out. So as of this point in time, if you don't have a position right now, I would not be trying to get in right now because, there could be a little bit of trickery because now you have almost two areas that are kind of like magnetizing each team. The bulls want to see this, bears want to see this. So now you're kind of like stuck in this tug of war sandwich between these two gaps. So right here, I would not want to take very many positions. I would want to see how this reacts. So let's say, we have this trend line right here. Let's say that we rally back up, we reject right here. Okay, well, that kind of looks more like a head and shoulders with a shoulder right there, head right here, and then a shoulder right there. And then maybe, we go and we cut down and we fill this. And then maybe we have a back test right here, and then maybe we cut down even lower. And then ultimately we have, a head and shoulders, a very bearish pattern that could get us down to this gap fill right there. But then, maybe somewhere along here, we could be building out an inverse head and shoulder or something like that. Maybe, that's the left shoulder, that's the right, and it looks a little bit sloppy, but, maybe that's the left shoulder, that's the head, that's the right shoulder, and then whoop, all the way up there, and then we fill that. So there's a lot of different scenarios. So I would not be getting too risk on right here. I would be more risk off. Wait until we see, let's say we have some upside. At least wait until this gap fills before you think about anything else. So I would honestly say that upside is just looking a little bit more limited here because let's just zoom out again. So let's just assume that we're following this wedge structure. If we're following this wedge structure right here, we're pretty much at the top of it. We're at the top of this structure basically. And you can see that in the past we did break out of this, and this was a false breakout, and then we went all the way back down to the bottom of the structure. So let's say you're getting calls right around here, and then let's say things don't turn out. Immediately we fill both gaps, and then you see bears just completely taking over, and then we go all the way down here. Well, obviously you got screwed big time. So right now, I would not be thinking about calls right here, at least for holding for a long period of time. And as far as puts go, like I said, you got that upside gap. So there is that risk there. But, I do feel like we could at least come down to here at some point in time. The question is really just, hey, how long is it going to take us for us to get down to this trend line? Are we going to get down to this trend line all the way over here several months later, or maybe at the end of May? Because if we reach this trend line all the way at the end of May, this is an uptrend line. We're way higher. So these are the things that you got to think about, because let's say you do go puts right here, and then let's say all the way over in June we're at the same area, but this time we're on support. So these are the things that you really got to think about. Now, obviously we do have those two downside gaps, so there is a little bit more bearish emphasis, I would say, in the shorter term. But as long as we are in this wedge structure, nothing's really broken. Nothing is really broken until we break out of this clearly. So right now, I would not say that this is a very clear breakout. I would say, if we do get above this former high right there, that would be a more clear breakout. And then, maybe we could start a new trend that isn't, another rising wedge like this. So that's pretty much it for QQQ. But you know what? Let's go ahead and let's just look at MACD and RSI. Let's just look at this fully. All right, let's see what's going on here. Okay, so with RSI here, obviously we were pretty overbought. So, we pretty much hit that 70 level. Now we're at around 60.8. So yeah, we've pulled back pretty significantly. What is going on with MACD? I got to change this a little bit because I can't see that blue very well. There we go, dark blue. And then let's go ahead, change this average line to, how about orange? There we go, then we can see that better. All right, so let's go ahead, let's look at MACD. So if I'm just looking at MACD right here, this is kind of curling just a little bit. You guys can see. The last time we had that bullish signal, that was right here, and we had that massive candle right there. We haven't had a bearish crossover in a little bit, but we almost had one right there. That was a trick. Got tricked big time on people who are kind of getting in on MACD before it actually crossed over. So now we're kind of seeing this MACD kind of flatten out. It's kind of curling over. This, if we do see a little bit more accelerated sell-offs, then yeah, that could produce a bearish crossover where the blue goes underneath the yellow. But as of now, this isn't confirmed. This is not confirmed. So, if you were to do the exact same thing right here where you're saying, oh, okay, this blue line is flattening out. Okay, it's starting to curl over. Okay, I'm going to get bearish right there. Well, guess what? Boom, you got smacked. So this is kind of why you want to look at RSI and MACD together. So, right here, we saw RSI was very, very heavy. So maybe you think, oh, okay, well, maybe we might cool off a little bit. Maybe it might be a good idea to start shorting. And then, hey, you know what? Maybe MACD is going to curl over a little bit. Let's just see how we play out. If we did fall a little bit, I'm still up on my short, so it's okay. I could see this move play out. Maybe we cross over, maybe we don't, but I'm up and I could see it play out. So that's kind of like the thought process that goes on there. All right, so now let's go look at the next one. So next one, we're looking at SPY. And let's just zoom out a little bit more. Or let's actually just go on the 10-year one day. How about that? So now I got the anchor VWAPs right here and right there. So you can see this one's anchored to the top, that one's anchored to the bottom. And look at where we're at. Let's just see. Yeah, this anchor VWAP is right at 407.51. We're at 407.60, so we're pretty much on that. We're just like ever so slightly above it. We still have these gaps to the downside. So let me just show you these gaps. So we're going to have to go on the lower time frame so you guys can see this. So we got this gap, we got this gap, we got this gap. So same as the video I had a few days ago, we didn't fill any of these gaps. So yeah, SPY still looks pretty darn strong until we at least fill this gap right there. So the nearest gap right here is right at 403.72 to 404.60. So we would need to go all the way down to 403.72 to fill that gap right there. Obviously, you know, we are above that, but let's go back. Let's look at the 10-year 1-day, and let's just look at this structure right here. So, you know, right here, you know, this does look more and more like it could be a potential head and shoulders. Left shoulder, head, and then right shoulder. This right shoulder is coming up kind of high, but yeah, as of now, you know, as long as we don't create a new high, you know, right now it still looks like a head and shoulders. If it were to just inch up a little bit more, that would look more like a double top. But yeah, right now I would still say that that is a head and shoulders. And you know, obviously if we do fall, you know, we do have this support trend line right there. And then, you know, where this gap actually closes could actually align with this support trend line. So we could just bounce again. And do note that we are in this rising wedge structure. So let me just zoom out a little bit more. So as you guys can see, we are in this rising wedge structure. So let's just say that we fall a little bit. Let's say we fill that gap right there. Well, are we going to fill this gap down here? Maybe we could just literally just go down here and then rip much higher. Maybe we hit the top of this. That is always a risk. So, you know, obviously if we come down to these levels right here, and let's say we fill that gap down there, you want to be careful because you want to see how we react off this level. If we have a bounce, and let's say we get back above this VWAP level that we're at right now, then I will perceive that as being bullish, and then maybe we could even go higher. Maybe we could hit the top of this wedge. So that is definitely some risk that you could have if you're going short right around this area. You do not want to go short right here. So that would be like the low 400s. You do not want to go short there. You would want to see this break, and then possibly when we come back and retest it, that's where you may want to short. And then by that time, you know, this VWAP might be a little bit lower. So things might be a little bit more for your side. And then, you know, if you're already holding puts, let's say we come down here, that might not be a bad area to hedge your puts with calls. So just some things to think about, definitely. And, you know, whenever I'm talking about these type of strategies, you know, I'm never talking about 1 week or 1 day or 3 weeks or 1 month. I'm talking like over a quarter. You want over a quarter of time. Because, you know, sometimes when you have runaway gaps like this, I've mentioned it before, it could take up to an entire quarter to fill these gaps. So that's always something that you do want to keep in mind. Now, let's go ahead. Let's also look at MACD and RSI here. Let's just see what's going on with the SPY. Alrighty, so, you know, in terms of RSI, you know, this was getting pretty high. It was right around like 60, 65-ish before we started falling. And if we are looking at RSI, it's kind of annoying. I do need to change that again. So apologize about that. Yeah, so if we are looking at RSI here, let's take a closer look. It still looks fine, but it is kind of flattening out just a little bit. So you might want to be a little bit cautious here. Obviously, if we do see some accelerated selling and we do see these gaps fill, that could curl down just a little bit. And then, you know, people might front run that. And then, you know, they might be seeing, oh, RSI is going to have a bearish crossover. You know, let's get in that move. And then let's say we come all the way down to that support and we rip. Well, then you get screwed. So that's why you got to be really careful in this type of market. When we're hitting a strong support, you take profits. And then when we break that support, you get back in. So these are the type of things that you need to know. You need to take your profits when we hit these big supports, because this market right now is what people characterize as a kangaroo market. It's going up and down, it's going up and down because there's a lot of uncertainty. We don't know if we're going to have stagflation, if we're going to have a recession, or if we're going to have a soft landing. Literally, these three stories change week to week to week. So, you know, one week it might be stagflation, one week it might be recession, another week it might be soft landing. So obviously, you know, the markets are a little bit crazy right now. The bond markets have a lot of volatility. And yeah, everything right now is a little bit choppy, you could say. Now, let's go ahead, let's move on. The VIX. So, you know, the VIX, if I'm just looking at this, it's kind of doing a whole lot of nothing. So it hasn't really reached my macro level trend line. So let's just zoom in on my macro level trend line right here. So if we wanted to reach this, we would have to hit right around like 1720s. So it'll be the low 17s pretty much. So it's a little bit hard to get these exact numbers on the VIX, but just know that it will be somewhere between 17 and 1750-ish. So that's really where you want to look. But right now we are kind of in this VIX demand zone. Let me just kind of move that out a little bit further. So you can see that we're kind of in this and we're stuck in this range again. So in the past, you know, we were kind of stuck in that range again, but you know, we're right there again. So let's go ahead. Let's look at 10-day 5-minute chart. And let's just go ahead, delete this demand zone right there, just so you guys can see this a little bit more clear. So as you guys can see, VIX has done a whole lot of nothing. So we got that gap right there. We went and filled it. We produced another gap right there. We went and filled it. We rallied up, you know, we produced another gap right here. You can't see that as well, but let me zoom in. Drat. Okay, there we go. So there you can see that gap right there. So that's a pretty big gap. And then we actually went and filled that same day. So boom, we filled that gap. So right now, you know, we basically got that gap fill, and it's kind of hard to tell what's really going on with the VIX, but pretty much from what I can gather here, if I'm just looking at this really, it's kind of just consolidating and it's getting ready for a big move. Is that going to be a big move to the downside or a big move to the upside? I think right now, after this big sell-off, it's kind of more or less favoring a move to the upside. So, you know, where do we think that the VIX can possibly go? If we're looking at this downtrend line right here, you know, maybe it could go all the way back up here to like the 26 area-ish. So that's kind of what I'm watching for on the VIX. You know, ideally, you know, if I was going to be bearish, I would really want to just see this trend line test. So if we're going off that thesis, then yes, SPY would have to rally again. So just something to think about. But I wouldn't be surprised if we did produce a rally off of these levels as well, because that's still in the VIX demand zone. So, you know, ideal situation would be this test and then massive bounce. But, you know, if we do go up from here, you know, maybe it could just be like a short-term sell-off. All right, dollar. So dollar is very, very interesting. And I'll tell you why. So if I would have to go out several weeks. So I'm going to go out onto the 10-year weekly, which we're on right now. And you guys can see, you know, going way, way, way back. You know, if we're drawing the support trend line, we have that test right there, that test right there. We have this test right there. And look where we're at right now. So do you notice why we kind of bounced today? It's kind of because we're right on this trend line right here. So let's just zoom in on a shorter time frame. Let's just go on the 1 year, 1 day. We are very, very, very close to this. And depending on how I draw my line, you know, that was on the weekly chart. This could actually be right on it right now. So something like the dollar is a little bit harder to chart because you got all these crazy wicks going on. But you know, if we're just looking right here, that could be a bottom right there before we do have another rally. So we do have this other resistance right here. It does show up, you know, possibly around this 104 area. So let's just zoom out again, just so you guys can see where this line is coming from. So this line right here is all the way from over here, and it's pretty much gathering several years of data. So if we were to just bounce off of this and we were to come all the way back here, you know, that would take us to the mid 104 area. And obviously, if we were to get back on this trend line, that would be highly, highly bullish for the dollar. And I think you would see a pretty substantial sell-off, especially in tech stocks. So definitely something to watch out for, especially that super macro trend line right there. Now, Microsoft, if we're just looking at Microsoft, let's zoom out a little bit. I have that anchored VWAP right there, anchored VWAP towards this more recent low that we had right there, which is bouncing off the support trend line right here. So if we're looking right there, it is kind of intersecting right around these 272-ish level. You guys can see that it's kind of intersecting right around that level. Right now, we did hit resistance, and we're kind of just floating right now. We're really floating in this former supply zone, which was this gap area right here. So that's kind of where we're floating. So if we were to fall a little bit more, what am I thinking? I'm thinking possibly we could come down to this 281.15 level, which was this resistance several times. But if we do break this, I think it's going to be a pretty sharp move down back to these anchored VWAPs right around that 272 area. So definitely be a little bit cautious of us breaking underneath that 281.15, because I think that opens the floodgates. And then that would probably be what triggers a pretty quick sell-off on the Qs and NASDAQ, or the Qs and SPY, I mean. But if we were to inch up a little bit higher, I do want to always play both sides here. If we were to go up a little bit higher, let's see, I'm going to zoom out a little bit. I would think, we could rally all the way up here. And then that would essentially fill this gap right here, which is at 292.38 to 295.73. So, that is pretty much the upside that we have right there. And then we will hit resistance again. And then, maybe we might have to come back down to reality, because right now, I think there's so much AI hopium that we're just having these like substantial rallies that are going far, far away from fundamentals here. So definitely something that I would watch, because the move to the downside could be very, very strong. If we were to touch this support again, that would be a serious, nasty sell-off. So definitely do be careful. Now let's look at Apple. So Apple is also pretty interesting, and my chart for Apple is way more complicated than any other chart. So if I am looking at this trend line right here, that is where I do think that we could find support. So let's say that we fall a little bit more. I would think that would be right around like 160-ish, where we could potentially find support. Right now, we're kind of in this wedge structure. We recently just hit the top of this, and then we're kind of rejecting. So, if we were to hit the bottom of this wedge structure, that could take us in the near term, possibly around like 156-ish, or maybe 157-ish, depending on how long it takes us to get there, because keep in mind this is an uptrend. And right now, I think the most significant area that we need to be watching is if we do get down to it, this 156.42, because look how many times we retested this and rejected. So if we were to break that area, I would think that this is going to be a significant sell-off that could possibly take us all the way back down to like the 150 to like 151 area. So I would think it would be a pretty substantial immediate sell-off if we do start breaking under that. So definitely do watch out for Apple, especially if we do get underneath this shorter term support right there, as well as this support right here at 163.70. Now, if we're looking at Tesla, it came really, really close to my anchored VWAP right there. So let me just zoom out a little bit so you guys can see this better. So yeah, this anchored VWAP is coming from this high right there. So it came pretty darn close to actually touching that. So right now, Tesla is looking just a little bit more risky because it is right on support. So notice right there, support, support. It's right on support. It's actually, I think it might actually be slightly below it, but it's right in that area. So this is coming right back into that chop zone, which is right around 175.85 to 185.13. And you can see that we do have these anchored VWAPs down here that could act as support. And now we're actually underneath the 50-day moving average at 190.54. So really what's going to carry us for support is going to be this trend line right here and these two anchored VWAPs right around 178-ish area. So obviously, if we do start falling underneath this consolidation area, things can get pretty nasty. And then this gap all the way down here at 146.16 to 154.25, that could come into play if we lose these two anchored VWAPs as well as this consolidation zone. So definitely be careful with Tesla. If we do get back over this 50-day moving average, I would perceive that as bullish, because right now we are pretty much on this trend line right here. It's very possible we could get a rebound and, just pretty much squeeze out the bears from here. But definitely, like I said, be cautious. If you're going long here, you want to have a freaking stop loss. That's all I can say. You want to have a stop loss. And if you don't have a stop loss, well then, yeah, you have a high risk tolerance. So definitely do watch out. All right, now XLF. So XLF, if we're just looking at where we actually rebounded, it's from this resistance line from these former highs right here. So we got high, 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 high right there, and then false breakout. And then we're coming back pretty much to retest that. So maybe we break underneath that. If we break underneath that, that would essentially mean that this entire move right there, that was a false breakout, and that would be very, very bearish. So as of right now, it kind of does look like it could potentially be a false breakout, but maybe not. Maybe this is just a retest to pretty much prove, oh, hey, I'm not a false breakout. I'm a real breakout. So, maybe it might just be proving that. But, we have to look a little bit closer, just kind of see where these gaps are. So let's go on a shorter time frame. So you can see right here, we had this gap, or I guess I have to go on the 10-day 5-minute. So you can see right there, we had that gap right there. That did get filled. So now we have two more gaps to the downside. So as of now, we filled that gap right there. We're consolidating. We'll see what happens next. But there is a situation where in the shorter time frames, this could be a head and shoulder. That's the shoulder right there. That's the head. And then right now, we could be building out a shoulder right there before we fall even further to fill these gaps. So do be careful. Now, if I'm just looking at RSI on, let's go back to the 10-year 1-day. If I am just looking at RSI, we're still in that oversold area. Technically RSI would be oversold at 30, but right now we're at like 41. So it's like sold, but not oversold, I guess is what I should be saying. So there is still a good chance that, we could produce some bounces off here. We do have bank earnings coming soon. There's going to be a massive focus on bank earnings. And people are going to really be focusing on those unrealized losses because, they're going to be worried, what happens if there's a bank run, something, unrealized losses, this and that. So, yeah, definitely something to be a little bit cautious of. Obviously, bank earnings is kind of like the first wave of earnings before we start moving into those mega cap tech earnings. So that's probably going to be a pretty darn volatile week. All right. And let's see, do I have anything else? Nope, that basically concludes it. But I lied because I want to talk about one more thing. So if I'm looking at expected moves for the Qs, the lower expected move was 314.53. The low of Qs today was right around that 314 area. So we actually came down to hit the lower expected moves. Obviously, right now we are above this. So do be a little bit careful here because we did hit that lower move. Now, as far as SPY goes, we're still well above this expected move for the lower end. So that basically wraps up this video, and I hope you guys have a good one.